This is a beautiful trade on GBP USD that has already played out. Alright, so stay with me as I take you on the top process on how I entered for this beautiful trade quickly. Alright, as you can see, the trade has played out perfectly well right here. Alright, so let me show you how I entered for this trade, and I will do that in just in few minutes. Alright, so let me review the trade for you guys. First of all, let me take this out so I can analyze a clean chart right here. Alright, so for those of you watching me for the first time, my name is Sammy Trade, or you can call me Sammy. Alright, here we teach people how to master trading from beginning to the top till you become profitable. Alright, so go check out my other videos about trading. You see, basically I talk about market mechanic. Alright, what is market mechanic? Market mechanic consists of supply and demand flip zone, supply and demand strategy, liquidity concepts, order block, market structure, price action. All these things are a market mechanic. Alright, so if you check out my video, you understand how to trade using market mechanic and be profitable. Alright, so stay with me as I analyze these charts quickly. Alright, yeah, I think this is okay. Yeah, now looking at this market, you see that GBP USD is bearish from the lower time frame. Alright, I'm not doing top down analysis today, I'm just analyzing from the lower time frame. This is the 1 hour time frame. Then if I want to enter for the trade, if I want to show you how I entered for the trade, I will go to the 15-minute time frame, but now I'm analyzing from the 1 hour time frame just to show you what I did right here. So first of all, I was having a break of structure to the downside. Now if you stay with me, I'm going to show you something, because something happened. Because we all know that GBP USD and Euro USD are positively correlating. Alright, they're positively correlating, they're doing almost the same thing. So I entered for this same trade on Euro USD, but I'm going to show you what happened there. But first of all, let's do this first. Break of structure here also. And another break of structure, and another break of structure also. Alright, so now this is the last break of structure we are having, so meaning that this is our lower high at this point, our lower high right here. Remember, as price is trading downward, we are having lower low, lower high, lower low, lower high, lower low, lower high. This is market structure. So when you come in the morning trying to analyze your charts, make sure you start from market structure. Alright, start analyzing your chart first before you enter for that beautiful trade. If not, what will you be doing? How can you enter for the trade without analyzing your charts? So you have to analyze your market and know the order flow of the market. You know who is in control of the market. Alright, either the buyers or the sellers are in control of the market. You know who is in control of the market, and try to react to what you are seeing in the market and not what you are thinking or what you are feeling or your emotions. Alright, just react to what you are seeing in the market. Keep it simple and keep it clean. Alright, so right here, if you can take a good look at this properly, let me take out this also. If you take a good look at this chart properly, you see that price was like kind of consolidating around at this point, but I didn't bother because I'm not having anything closing above this point. Price is not trading above this lower high here, so I'm not bothered with all this noise here. Alright, I'm not bothered. I kept my cool, I kept being patient. First of all, price pierced up, but not above this lower high here, but we had that here at this point. And see, Price went above these points. Now, this was what I wanted to do. I wanted to enter for the trade right here when the price retraced. But guess what? If I'm entering for the trade at this point, from this point, let's say I entered from the lower target from that point, my stop loss would be below this point. Do you know my stop loss would be below this point? Because as you can see, there is no shift of structure here. I don't know if you are seeing this. There is no shift of structure. Even if you go down to the lower time frame, you won't see any shift of structure here because it just consists of bullish candlestick. You can see the buyers entered for the market aggressively, so I didn't get any shift of structure. So I didn't enter for the trade because, first of all, price is at the middle of this fair value gap here, and sometimes you know that price do forward 50% of the fair value gap, but sometimes price forward it all. So I can't do something like this. Price can just cover this full fair value gap. Sometimes price do cover 50%, but sometimes price will still cover all the fair value gap. But I can do something like this now, and price will try to cover the full fair value gap and stop me out. So I didn't do that. I was waiting for a shift of structure, but I had none at this point. There was a lot of bullish candlestick piercing up, so I didn't enter because this is an aggressive buying movement. All right, so I didn't enter at this point, but I entered right here after I had another break of structure at this point. After this other break of structure right here, after this other break of structure, we had our flip zone, which is below this point. This is our flip zone. Now, how is this place my flip zone? For those of you that do not understand what is flip zone, anytime you have the market pushing close to somewhere like this and reject, because if this market is still bearish, remember that the market has not broken structure or shifted structure yet. All right, I've not shifted structure yet until we got to this point. So this is not enough for me. Price can still keep going down. I don't know if you're understanding me, but price refused to go down from this point. I don't know if you're seeing this clearly. Price refused to go down from this point, but rather price closed above. All right, price can still keep going down like this, doing something like this before finally going up. I don't know if you understand, before finally going up, but price did not do that. All right, price did not do that, but price just rejected this point and just went up. All right, so here is our flip zone. All right, here is our flip zone. So I entered from this point. Let me show you from the 15-minute time frame how I entered at that point. Let's go to the 15-minute time frame quickly. 15-minute time frame. Right here, we are on the 15-minute time frame now. This was what I did from the 15-minute time frame. Let's zoom in. You can see the flip zone I was talking you guys. This was the flip zone I was talking about. So like I said, if price or if this supply zone were to do its thing, price will continue going down. All right, price will continue going down, but it failed at this point and gave us this supply flipping into demand. I don't know if you're understanding me. So this supply zone is no longer strong anymore because this demand zone is breaking above it from here. This demand zone is now breaking above it from this point. I don't know if you have understand something clearly now. So supply is flipping to demand, because if you check properly from this point, we need to see at least 3 candlesticks closing above this point for we to consider it as a shift of structure. But we only have 2 candlesticks, not even 2 candlesticks. One is a smaller candlestick and the other is a big candlestick. So you see, I was just trying to be calculating things to make sure that I'm doing the right thing, that I'm not acting based on my emotion or trying to impose my thoughts into the market, and make sure I'm doing the right thing. All right, so I waited for a liquidity sweep below this flip zone. Remember, anytime you have your flip zone, there's always liquidity below it. Don't forget that. So I waited for a liquidity sweep, which I had here below the flip zone. So after the liquidity sweep, I waited for a shift of structure. As you can see, price was trading downward without no shift of structure yet. Price was trading downward, giving us a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now let me zoom in again. This is our last lower high, or this was our last lower high at this point right here. So now you see a clear shift of structure. We have 1, 2, 3 candlesticks closing above each other. You can see closing above each other. So this is a valid shift of structure. All right, this is a valid shift of structure. So I entered immediately. I saw this engulfing candlestick after the retracement to my discount. Sorry. After the retracement to my discount. And see, price is at our discount. So I entered immediately. I saw the engulfing candlestick right here. I entered for this trade twice. All right, my stop loss was right below this point. Now I'm having a nicer stop loss. Rather for me entering from this point. Look at this. Entering from this point, and my stop loss will be below this point. You can see I can't be doing this. This is too risky. All right, I can't risk too much. I know my limits and I know how much I'm supposed to risk per each trade. All right, so I can't be doing this. I have to wait for something that gives me what I want. Wait for the market to give me what I want, what aligns with my trading rules and my trading plan. All right, so like I said, I would have done something like this right here. This is the best point to enter for the trade, like this, but I didn't because I was not having any shift of structure right here. Let me take this out. You see this price was just clearly moving upward. There was no shift of structure. So I didn't enter at this point. There was no shift of structure. Price was just going upward. Most traders will enter from this point, but I don't do that. I wait for the market to give me what aligns with my trading plan. Then I trade with it. All right, so I ended up entering from this point. I entered for the trade 2 times. Right here. And at the same spots. Right here. All right, so this was the trade. Now if you are wondering where I set my take profits, let's zoom in, or let's zoom out to the higher time frame. Not the higher time frame, let's just zoom out. Yeah, you can see this. When price was trading downward, we had a huge fair value gap at this point, and price has not mitigated it yet. So I knew for a fact that price will come mitigating it because I'm counter trading. All right, so price will retrace to somewhere at this point or somewhere at this supply zone here before price will continue going down or whatnot, or keep going up, because you can't predict the markets. All right, the market is fractal. So right here we had a supply zone here, if you can see properly, and a mini supply zone at this point. I don't know if you can see this mini supply zone right here. So I made use of this mini supply zone here, and my take profit was right at that point. Then my first take profit was at this high here. You can see this supply zone at this point, this internal supply zone here. So I take profit right there. As you can see, it was a beautiful trade, played out perfectly well. All right, so this is how you do it, as simple as this. Now Like I said, I entered for this trade on GBP USD, also on Euro USD. Now let me show you what happened on Euro USD. Almost the same analysis. Now let's go to Euro USD. All right, this is Euro USD. Now let me show you what I did on Euro USD. Almost the same thing with GBP USD. All right, now like I was analyzing on GBP USD, a downtrend. If you look clearly, you see that this is the external supply zone we had. So I waited for price to break above it, giving me that shift of structure, which I had right here, which I had at this point. Let me zoom in. At this point, I had the shift of structure at this point. So I waited for a retracement. After a good retracement and a liquidity sweep below our flip zone right here, and the liquidity sweep below our flip zone, you can see that this is a liquidity sweep right here below our flip zone. So this analysis is correct. I traded this based on my trading plan. I followed my trading plan. I did everything. So I won't consider this as a losing trade. All right, I will consider this as a winning trade because I followed my trading plan. It is just manipulation that made me lose this particular trade. All right, so look at what happened at this point. Now, as price was trading downward, the lower low, lower high, lower low, lower high, lower low, lower high, on the lower low at this point, I drew out this line here, this horizontal line at this point, because this is my last lower high. So I had that clear shift of structure. After the clear shift of structure, I had the retracement. All right, I had a clear retracement, and price was aggressively buying from this point and retraced again before I entered for the trade at this point, because I was supposed to enter right here, but I didn't enter at this point. But when I looked at the market was somewhere here, somewhere at this point, and I can't enter from that point and then set my stop loss below this point. It's too much to be risking. So I waited for a little pullback, which I had right here. You can see this pullback, this bearish candlestick we are seeing here. I entered at this point because this is like a little bit more better for me. So I entered at this point, and immediately I entered from this point. Look at what price did. Price came piercing below my stop loss. Now, anytime you have something like this, take note. Anytime you have something like this is mostly manipulation in the market by smart money. All right, you can see this long wick candlestick here. You can see this long wick candlestick here piercing below, stopping me out. It's manipulation, guys. So take notes. Like I said, this analysis was not wrong. I did the analysis correctly. As you can see, price went to my TP. Price went to my take profits right here. So what I could have done again was that I could have entered immediately, price stopped me out, but I did not. All right, I just let the trade play out. As you can see, played out straight to my TP. I wish I had entered again. I would have made a lot of money from here, but then again, it is what it is. All right, it is what it is. Price stopped me out and then went to my TP. So you see that the analysis is not wrong. Everything is correct. It's just that there was a manipulation at this point, which is perfect, which is fine for me because trading is random. All right, the market is random. You can have manipulation anytime, at any day, or any minute, or any point in time you are trading. All right, so it's normal thing. All right, so I hope you have understand something from this video, and happy trading day and happy trading week.